Hello students, welcome to my YouTube channel Sun Academy. In this lecture we are going to solve a question of capital reduction in financial accounts. As you can see, the question is balance sheet of Devta Limited as on 31st of March 21. Under the heading of equity and liability, shareholder fund shows share capital of 8 crore and reserves negative minus 1 crore. Non-current liabilities showing 10% debentures of 6 crore. Current liability shows trade payables 1 crore 80 lakh and outstanding debenture interest 20 lakh. Then after it has been said that asset side, non-current fixed assets tangible 8 crore, intangible 2 crore. While current assets showing inventory of 1 crore, cash and cash equivalent 2 crore, trade receivable 2 crore. While contingent liabilities shows a claim of 1 crore. Then it has been said that following capital reduction was sanctioned by the court to write off stock 20 lakh and trade receivables of 40 lakh, eliminate intangible assets, half of the arrears preference dividend for 1 year was paid in cash, debenture holders to be given building of 1 crore 60 lakh at 2 crore 40 lakh as part payment, and further they will provide 2 crore cash on floating charges deducting interest due. Contingent liabilities materialized 80% as full settlement to reduce equity and preference share capital in 2 ratio 1. Prepare past entries and prepare balance sheet. Now as you can see on the board that first we will do calculation, then after write journal, then after we will prepare cash account and balance sheet. First here it has been said that to write off stock 20 lakh, so that will be written on inventory side, utilized side. Then after trade receivables 40 lakh. So entry for that will be capital reduction account debit 60 lakh to inventory account 20 lakh to trade receivables account 40 lakh, being inventory and trade receivables were written off. Then after is eliminate intangible assets. So intangible assets showing goodwill of 2 crore. First let's write entry because other adjustment shows a different thing. capital reduction account debit. What was the amount? 2 crore. To goodwill account 2 crore. Being goodwill was written off. Then after is half of the area preferred dividend for 1 year was paid in cash. Now let's calculate. Preference share capital is 4 crore and rate of interest is 12%. So that will be 24 lakh. Capital reduction account debit 24 lakh to preference dividend account 24 lakh being preference dividend calculated. Then after this dividend will be paid in cash, so preference dividend account debit to cash account being preference dividend paid. In cash. Then after it has been said that debenture holders to be given building of 1 crore 60 lakh at 2 crore 40 lakh. That means 80 lakh they will provide benefit to company, will be written on reduction side. Which asset is to be provided? Land building. To debentures as part payment, and further they will provide 2 crore cash on floating charges deduction interest due. They will deduct interest. So first debentures of 2 crore 40 lakh will be cleared. Two crore 40 lakh to land building account 1 crore 60 lakh to capital reduction account 80 lakh being debentures were paid. Then after they are providing 2 crore, so cash account debit 2 crore to what was the percentage of debentures? 10% debentures. Being debenture holders paid. They will be paid due interest, and that was 20 lakh. So due debenture interest account debit 20 lakh to cash account. Being due debenture interest paid. Then after is contingent liability materialized 80% as full settlement. Contingent liability was 1 crore. Let me check whether it was right or wrong. Yeah, and 80% is to be paid. That means 80 lakh is to be paid as contingent liability. So entry for this will be capital reduction account debit 80 lakh to contingent liability claim account being liability accepted, then contingent liability claim account debit 80 lakh to cash account being liability was paid. Now profit and loss account 1 crore, last item on the utilized side. So total of this side will be 2 crore, 3 crore, 4 crore, 4 crore 64 lakh. While capital reduction shows only 80 lakh, so three crore 84 lakh are to be written off from equity share capital and preference share capital in 2:1. So preference share capital is to be written as 1 crore 28 lakh and 2 crore 56 lakh from equity share capital. So this will also be 4 crore 64 lakh. Now journal for first 1 crore will be capital reduction account debit 1 crore to profit and loss account being profit and loss account was written off. Then after entry will come for preference share capital and equity share capital. That will be equity share capital account debit 2 crore 56 lakh. Preference share capital account debit 1 crore 28 lakh. To capital reduction account, that was 256 plus 120 3 crore 84 lakh. Being both capitals were written off. Now if I come to balance sheet, total capital was 8 crore, out of which 3 crore 84 lakh has been written off. So remaining will be 4 crore 16 lakh. While profit and loss account was totally eliminated, and under non-current liabilities 10% debentures were of 6 crore, out of which 2 crore 40 lakh were written off. So 6 crore minus 2 crore 40 lakh, and they also provided cash as 2 crore. So debentures will be 5 crore 60 lakh. New debentures. These are under current liabilities, that was trade payables, which had nothing to do with the scheme of capital reduction. Sorry, trade payables 1 crore 80 lakh. There wasn't any new liability. So total of the liability side will be 4 crore 16 lakh plus 5 crore 60 lakh plus 1 crore 80 lakh, that is 11 crore 56 lakh. Now here comes the number of non-current assets tangible, which showed 4 crore land building and 4 crore machinery. Land building was given to debenture holders of 1 crore 60 lakh. So out of 4 crore, 1 crore 60 lakh building was discharged. So building remains of 2 crore 40 lakh, and machine had nothing to do. So 6 crore 40 lakh. Then after comes intangible, which showed goodwill, which was written off. Inventory showed 1 crore, out of which 20 lakh was written off. So inventory will remain of 80 lakh. Trade receivables that were 2 crore, out of which 40 lakh were written off, so 1 crore 60 lakh. Now comes the number of cash and cash equivalent. For that we will have to prepare a small cash account so that you can understand easily. Cash and cash equivalent had balance of 2 crore. Then after 2 crore were released by debentures. By outstanding debenture interest, and that was 20 lakh. Nothing was paid to anyone. It was paid contingent liability, and that was 80 lakh. By contingent liability 80 lakh. These are the points where you should be very careful. Preference dividend was paid in cash, and that was 24 lakh. So the balance will be, out of total 4 crore, 1 crore 24 lakh. 2 crore 76 lakh will be the balance. By balance, CD 2 crore 76 lakh. Now let's check the total of asset side. 6 crore 40 lakh plus 80 lakh and 1 crore 60 lakh, 11 crore 56 lakh. Then after we will have to make notes. Note 1, share capital. Equity share capital was 4 crore, out of which 2 crore 56 lakh were written off, so 1 crore 44 lakh. 12% preference share capital, that was also 4 crore, out of which 1 crore 28 lakh were written off, so 2 crore 72 lakh, and total of 4 crore 16 lakh. Note 2, tangible fixed assets. First was building. Building was of 4 crore, out of which 2 crore, 1 crore 60 lakh was released, so 2 crore 40 lakh. And plant, that remain unchanged. In this way, 6 crore 40 lakh will be the total of note of the tangible fixed assets. You saw that we got accurate answer. So if you go slowly, then you are going to get exact and perfect answer. Let's repeat, though even there isn't full sum on blackboard, but still I will try my best to revise. First, it was said that to write off stock and trade receivable. So both figures were written on utilized side, and entry was capital reduction account debit to stock to trade receivables. Eliminate intangible assets. So goodwill was written off, capital reduction account debit to goodwill account. Half of arrears of preference dividend for 1 year was paid in cash. So for 4 crore 12% was 48 lakh, half 24 lakh was paid in cash. So capital reduction to preference dividend and preference dividend to cash. On the credit side, it will be written in cash account. Debenture holders were to be given building of 1 crore 60 lakh at 2 crore 40 lakh. So they gave benefit of 80 lakh. Debentures account debit to capital reduction to building account will be credited up with 160 and capital reduction with 80 lakh. Then after it was said that they will provide 2 crore cash additional on debit side of the cash account debit to debentures account. They were paid due interest in cash. So outstanding debenture interest account debit to cash account on the credit side of the cash account. Contingent liability materialized 80% as full settlement and was paid. 80% of 1 crore 80 lakh. Capital reduction to contingent liability to cash. On the credit side of the cash account will be written. To reduce equity share capital and preference share capital in ratio of 2:1. But before that, profit and loss account is to be written off. So capital reduction account debit to profit and loss account, because this is loss. So whenever reduction scheme is going on, then loss is always eliminated. When total was done for utilized side, it was 4 crore 64 lakh, reducing 80 lakh, remained 3 crore 84 lakh, which were distributed in 2:1, 2 part to equity share capital and 1 part to preference share capital. So entry for that was equity share capital account debit, preference share capital account debit to capital reduction account. Now by preparing cash account, we found the cash balance closing 2 crore 76 lakh on debit side, opening balance 2 crore and 2 crore which was provided by debenture holders. So deducting debenture interest and contingent liability, preference dividend, closing balance was 2 crore 76 lakh. When balance sheet was prepared, out of 4 crore of equity share capital, 2 crore 56 lakh was subtracted, so 1 crore 44 lakh will be the balance, and similarly for preference share capital, so total of share capital was 4 crore 16 lakh. Then after debentures, old debentures were of 6 crore, out of which debentures of 2 crore 40 lakh were settled. They provided 2 crore additional, so balance figure will be 5 crore 60 lakh. Nothing was done to trade payables. When it comes to tangible fixed assets, out of building of 4 crore, 1 crore 60 lakh building was given to debenture holders, so balance 240 and plant of 4 crores 6 crore 40 lakh. Inventory of 20 lakh was written off, so out of 1 crore balance will remain 80 lakh. Similarly, balance of 1 crore 60 lakh will be the balance of trade receivable, as 40 lakh was written off from 2 crore. Uh, at last, cash and cash equivalent 2 crore 76 lakh, and both the sides were tallied. Now, if you are not following us, do follow to learn these kind of unique question. I think you will see very few questions of this type on YouTube, because most of the channels like to solve what is in the textbook. And if you practice these kind of hard sums, book is some very easy for you. Like our channel, share the link of our channel, comment. One more thing, hard work will always pay you off, so don't hesitate to do hard work.